Good morning. Welcome to this week's market update. The S&P 500 wrapped up last week by notching its ninth straight winning session, its longest positive streak since November of 2004. On the week, the broad index added 2.9%. The Dow added 3%, and tech once again led the way with the Nasdaq jumping 3.4%. Last week's recovery was driven by a combination of continued hope surrounding upcoming trade deals, earnings resilience, and a much better than expected April jobs report. This jump also came despite a disappointing GDP report that showed the U.S. economy contracted in the first quarter. Comments from Commerce Secretary Lutnick suggested last week that at least one trade deal was nearing completion. Markets rallied on the news and hopes that talks with the Chinese were beginning to open. We anticipate similar movements as more positive trade news trickles in. The first quarter GDP report came in weaker than expected at negative 0.3%. The decline was driven by the largest import surge in almost 5 years. Unless tariffs remain elevated, we expect quarter two to return to a positive figure. April's non-farm payrolls report surprised to the upside. The U.S. economy added 177,000 jobs versus the projected 138,000. The unemployment rate remained at 4.2% for the month, which is still considerably lower than the long-term average of 5.7%. The Federal Reserve is scheduled to meet this week, and while no policy changes are expected, we will be monitoring rhetoric closely for clues on future plans. After Friday's pleasant jobs report, chances for a June rate cut dipped from 69% to 31% per CME Group. This week, earnings season continues with Disney, Uber, and Palantir amongst the big names reporting. Thanks for tuning in. Have a great week.